Hey guys, welcome back to Crypto Point. In this video today, we're here to bring your attention to something that might just change your life. Bitcoin, as predicted by the market giants, is all set to crash to $10,000 level, and we're here to tell you what to do when it does. But first, subscribe to our channel and hit the bell icon to never miss a video from us. That said, now let's begin. The last time Bitcoin's worth was less than $10,000 was in July of last year, when the asset's value was significantly lower than it is now. Since then, the asset's worth has seen significant adoption and growth, pushing its price to its current all-time high of around $68,000. BTC might fall to $10,000. However, one of the world's finest money managers, Louis Navellier, has issued a frightening price prediction that has sent shivers down the spines of many crypto investors and the wider community. If a specific scenario occurs, he believes the value of the flagship digital asset might plummet to as low as $10,000. According to Navellier, Bitcoin might see an 80% negative trend if the flagship crypto asset creates a frightening double top pattern. This would push the asset price lower, below $28,000, signifying the end for bulls. If the double top pattern appears, Bitcoin will be traveling to zones it hasn't visited in over a year. I'd consider a drop below $46,000, the 200-day moving average, to be a red signal, and a drop below the spring low of $28,500 to be a completed big double top pointing to a drop to below $10,000, which would coincidentally mirror many of the multiple 80% plus drops in its illustrious history. Also, while this projection for the crypto king appears absurd, it's not a wholly new phenomena, as the commodity already saw an 84% price correction when its value dropped from a peak of $20,000 in December 2018. Louis Navellier is the founder and chairman of Navellier Associates, a $2.5 billion asset management firm based in Reno, Nevada. He provides market analysis for major news organizations such as Bloomberg, CNBC, and Fox News. He also believes that the United States Federal Reserve's bond purchases will provide Bitcoin the biggest boost. The Fed is starting to taper, which should cause a drop in risk assets, including Bitcoin. The more the Fed tightens its monetary policy, the more volatility we should see in equities, bonds, and yes, Bitcoin. Cryptocurrencies were all the craze earlier this year, with the prices of numerous coins reaching new highs and the public offering of crypto exchange Coinbase. Elon Musk, the founder of Tesla and a crypto aficionado, tweeted rocket and moon emojis, fueling the rallying cry to the moon, and both large and small investors poured into the market. However, since the spot price of Bitcoin, the most popular cryptocurrency, surpassed $65,000 in April, the values have been volatile. Bitcoin prices had plummeted by over 50% by early June. Though the market has now recovered, many of those new crypto investors are likely to have been affected. It's fascinating because every time Bitcoin rises, it gains all the hoopla and people become enthralled, says Kiana Daniel, author of Cryptocurrency Investing for Dummies. However, according to Daniel, the last person to buy while the price is at its highest is the person who will panic when the price ultimately declines. So, what happens if your digital assets such as Bitcoin crash? You're not alone if you're watching in terror as the value of assets in your crypto exchange account plummets. Here are some strategies for dealing with a crypto roller coaster. 1. Keep a long-term perspective. Investing in cryptocurrencies is incredibly risky. We've already seen many large price drops in 2021. According to the graphic, cryptocurrency values gradually rose after each fall, reaching new highs. Don't get too caught up with the 24-hour charts. Instead, pan out and take a look at the entire year. All market cycles have ups and downs, but with a new and largely untested investment like Bitcoin, they're more dramatic. You can't afford to wait out the drops as much as you haven't invested money you need in the short run. 2. Don't panic sell. It's normal to desire to minimize your losses and sell your crypto assets when the value of your investments plummets. However, this frequently means selling at a low point and missing out on any later recovery. Let's imagine you notice Bitcoin's price drop by 20% and decide to sell your holdings. What occurs if the price suddenly returns to its previous level? You've lost 20% of your investments and may be hesitant to repurchase it. In short term, you never know what rates will do. They may continue to fall, but they might also rapidly rise. As a result, put your faith in your original research and investment theory. Be optimistic that the price of your Bitcoin investment will return if you believe in its long-term value. 3. Consider buying the dip. People often talk about buying lows and selling highs, but it's nearly difficult to time the market in this way. That's one of the reasons the Ascent recommends a long-term investment strategy. A short-term price changes are less of a concern if you only acquire assets you anticipate will do well in the next 5 or 10 years. Significant drops, on the other hand, may give an opportunity to buy more of your preferred tokens at a lower price. For instance, there may be tokens on your watch list that you've been meaning to purchase but have been waiting for the ideal opportunity. You might also wish to buy more of specific tokens you already possess if you believe they have a bright long-term future. Don't, on the other hand, fall into the panic buying trap. It's pointless to buy something you haven't thoroughly researched and don't actually desire just because it's on sale. And buying the drop with money you need to fulfill other financial goals, or worse, borrowing money, is not a wise option. Cryptocurrency investments are still risky, and there are many unknowns, especially as the threat of increasing regulation looms. It's possible that you'll try and buy the dip just to see prices drop much farther. 4. Understand why the market is falling. Understanding why prices are falling is a good thing in case it affects your original investment concept. If your purpose for investing is still valid, the points we gave earlier are still valid. It's a different matter if something has radically changed. For example, if there has been a security breach and you no longer trust a specific project. Let's imagine you purchase a cryptocurrency because you believe the underlying blockchain technology has the potential to change a particular sector. On speculation that quantum computing breakthroughs have rendered the technology obsolete, the price begins to decrease. If the reports are genuine, it may be time to reconsider your investment. Your justification may no longer be valid. There are a few factors for the recent market-wide drop in the event of the recent catastrophe. One is investor aversion to riskier assets due to concerns about the new Omicron COVID variant. Furthermore, the Federal Reserve has indicated that it may hike interest rates, but there are still rumblings about tighter regulation. 5. Make sure crypto is only a small part of your overall portfolio. Finally, these price drops serve as a reminder that investing in cryptocurrencies is exceedingly dangerous. It can appear that making money is simple while prices are rising. However, any investment takes time and effort, and prices don't always rise. To reduce the danger, simply invest a tiny portion of your overall wealth in cryptocurrency. There are plenty of alternative, safer investing possibilities, so aim to retain a fair share of your portfolio in stocks, ETFs, and real estate to balance your risk exposure. That way, if the current drop is the start of a wider crash, it won't put you out of business. Crashing cryptocurrencies is an unavoidable feature of this form of investment. If this is your first step, hang on tight and wait for the price to recover. You may then decide that investing in cryptocurrency is too stressful for you, which is understandable. However, avoid making any hasty decisions. Before you begin selling, give yourself and the market space to breathe. Keep in mind, we aren't financial planners. You must undertake your own research and, if required, seek the guidance of a licensed financial advisor in order to make good financial decisions for your own requirements. And that's all for today's video. Don't forget to like this video and subscribe to our channel, CryptoPoint, for more such exciting content. See you in the next video.